This chart is an example of a trade that I actually made, and what happened was after I'd made a series of trades on this currency cross, what I did was I decided just to take a quick screenshot of the it's a 55-minute chart, but 1 hour chart effectively. And I just want to take a screenshot of it so that I can show you that I traded this almost solely on resistance and support. And let's just walk through the scenario. Let me just give you a bit of the background. You may see that this is a fairly unique cross. It's the Kiwi Yen cross. What was happening at the time was because as a trader, of course, I'm consistently watching the global news and events that are happening around the world on any given day or on every day of trading, because it's important to have your pulse on the market and having an effective understanding of the global fundamentals that drive the market, or some of the primary drivers of the market. And for more details on that, you can, of course, there's a course out on understanding global fundamentals that should be that should help you quite a bit with your trading. But what was happening in this scenario was fairly unique, and to be honest with you, I really don't trade the Kiwi Yen cross, but in this case I did, because of what was happening in combination between the fundamentals that were coming out and, of course, the technicals. But the fundamentals were the primary factor, what drew me towards this currency cross. And what was happening at the time was there were some scenarios that were happening in Japan with some discussion around the potential of lifting the zero interest rate policy and so forth, and um, some other factors in terms of the overall economic situation at the time. But more importantly, some of the things that were happening in New Zealand concerning exports, and the exports seemed to be fading somewhat. And what the Prime Minister of New Zealand did was to stimulate some exports. Was he started to sort of verbally jawbone or grind down the valuation of the currency simply by publicly stating that he just effectively made a statement saying that he effectively did not care if traders sold his currency, and that pretty much is a green light, folks. It's a green light to have your currency sold when you're the leader of a country and you make such a statement. Now, typically, there's an agreement among central banks that you really shouldn't do those kinds of things, but the Kiwi dollar is relatively less prominent than the majors, and so it can be somewhat overlooked and understood by the other central banks and market players, because it will have a relatively modest or light impact on the overall foreign exchange spectrum. So having a closer look at this here, what we saw was we actually saw one nice leg down prior to this consolidation here, in which price moved into this pennant formation. And then we saw the stimulus come into the market here, and we saw a breakout, which was a great opportunity to sell on its second or third leg down. And a nice opportunity to sell here. And of course, the first place that we're looking is this level of support. And we see here how price bounced. This candlestick here stopped, and price had bounced up and retraced, and before continuing its next leg down, formed a level of support here. And once price starts to, if there's not enough room to start to take profit already in this area here, then you want to take profit as it's making its next leg down, continuing. But we see here that price just made this consolidation and took another leg down. It rallied, and this level of support became resistance to another leg down even further beyond this low. But this whole area, of course, provided opportunity to buy back what you would have sold during this breakout. Then there was a decline in selling interest, and in fact maybe some profit taking or some squaring of positions, as price drifted back up towards this primary reference point of support. And folks, let me tell you that I just traded this using resistance and support, quite simply, using resistance and support. The verbiage continued to flow out of New Zealand, jawing down the value of the currency. and again lended to more liquidation or more flows coming out of that currency and into other currencies. There is also some instability factors, and also there was a squaring of carry trades during this scenario, and the buying back of yen, not only in New Zealand dollars but also in Aussie dollars, pounds, and US dollars, a squaring of position for the carry trade, which was partially stimulated by Japan making a statement that there was a potential to lift their zero interest rate policy, and that's just verbiage that occurred at the time, and it was kind of the hot item and hot news item for the week. We see price comes up here to resistance, which was previously support, and we see it make another significant leg down, and I in fact sold it in this area with my target objectives, of course, on the way down, taking a profit out on the way down before it meets this level of support, because we don't know if this support is going to give way or not. In fact, it did, and as it got through, it was my next order of business to watch price come back up to this last level of support, which became resistance. And this was a very a time in the market where trading was very light, and it's important to know that. I sold into that in any event, and what I did was I still had positions carrying over from some of the previously accumulated positions, but when you add to a position, you're actually assuming it as a whole new position relative to your equity management, which we'll cover in more detail later. But sold again here, looking for another leg down, and you see how price stalled at this low here. Price stalled there for a couple of hours before moving through and continuing its leg down. And I just wanted to show you here an actual real life scenario where I simply sold and did very well just on using support and resistance as my primary trading techniques in this particular example. Just to look at some further examples, there were some really nice trends happening during this week, and we see in this downtrend, we see here support, later became resistance, and it was a great opportunity to sell. It was, and then we saw again this consolidation and continuation, and then we see price retrace to the defined level of support, which became resistance. And you see this real nice candlestick formation here. This dragonfly. It's kind of a dragonfly doji slash hammer. What happened here was, this is when liquidity picked up. This was the open of the European session, and when the European session opened, it spiked up, tested this level of support, and quickly withdrew. And that is strongly suggestive of another leg down. So then price moved down here, and in fact just between here and here there's profit of 30 pips or more. Then when the US session opened, we saw another spike up and then a continuation down below the lows, and again price slowly drifting up the following day, testing the previous lows. This is an Australian dollar 60-minute chart, and we see a consolidation here. Price moves above, comes back, converges. This level of resistance converges with our 10-day moving average before a distinctive leg up. We see a very clearly defined level of resistance. There's even a trade right in here. Price quickly moves above and over a period of time drifts below. Now, what we see is once we see price break through this level of resistance, you should clearly note it with a horizontal line and look for that as a reference point in the future here as we see a triple bottom form before its next leg up. Just an example here of resistance. Every time price comes up and tests resistance, we see what's called selling pressure, and it moves back into consolidation. We see more selling pressure, and here actually the selling pressure gets weaker because you see it didn't get as high as the previous, and again more selling pressure. Buying pressure on the levels of support, more buying pressure, and so forth. If you're looking for technical perfection, it is highly unlikely that that will be achieved. If you need technical perfection in order for you to make a decision to trade, then you'll probably be waiting a long time for trades, because the market will come at you. Every scenario that you will ever encounter in the market will be unique unto itself and uniquely different than any other scenario that you've ever encountered. However, what we're looking for is patterns of similarity, and we have to work with and be flexible with the patterns of similarity that are presented to us through the charts. You have to be flexible in your view of the chart and your management and understanding of the charts and the price action, but you have to be rigid in your discipline and patience and equity management. Wisdom is knowing what to do next, while virtue is doing it.